Quick daily market analysis for Friday, December the 5th. Hi guys, I'm Don. I'm a financial analyst and a trader. The American markets were higher right across the board today. That's on the back of the PCE inflationary report out, which is the personal consumption expenditure index there, showing that inflation month over month was up 0.03% and year over year was up to 2.8%. This is the sort of preferred inflationary gauge that the Federal Reserve likes to use to measure inflation. We did have also a consumer sentiment index out showing that consumers are more positive for the month of December. They are seeing long-term inflation dropping, which is making them more comfortable with the economy. And over to European markets, where stocks traded mixed yet again. That's as investors and traders are assessing economic data that is a little bit soft within the Eurozone area there. However, traders, investors are ready to pivot higher as they are hoping that the Federal Reserve will cut rates next week. And if they do so, we should get a continuation of a rally. And over to UK markets, where stocks fell today, and they fell for the week also, with sort of a weak sentiment there permeating through traders and investors there. We had data out for the housing market in the UK showing that prices in November stayed relatively flat. So consumers are sort of struggling with the cost of things there under a bit of a pinch. We had the David Lammy out from the Labour government, essentially saying they are looking at joining the Eurozone economic community there once again. As they say, it will help drive economic growth. And lastly, Canada's TSX fell after reaching all-time highs this week. That's on the back of a mixed commodity sector there. We did have a jobs report out for Canada for the month of November, showing we had a surprise job creation of another 53,000 jobs. That's against the estimates there coming in from economists of about 5,000 job losses. So again, a big change there from gains and losses. However, part of the issue with the job report, if we look further inside, almost all of those job gains are part-time, and we did see a loss of 9,000 full-time positions. So obviously, it's very unlikely that the Bank of Canada will cut interest rates at its next meeting because of that surprise to the upside in the labor market. We also saw unemployment drop down to 6.5%.